Appreciate everybody tuning in. Let me do a quick audio visual check. Let's type D. Type a D in the chat if you can hear me and see my screen. Just want to make sure we're all crystal clear before I get going. All right, perfect. Got even a couple double D's in here, so that's extra oomph. All right, so as I always like to say, well, first off, my name is Silas Peters from Seasonal Swing Trader. You are here to see how I'm profiting off the waves of the market. I love this topic, this presentation, because it's something that actually works, something I actually use on a day-to-day basis, and I enjoy really teaching this strategy. And as I always say, ask all the questions you want during the course of the presentation. I'm not ignoring anybody. I want to make sure I actually get through the strategy, the meat, teach you something that you can walk away with and start using, here on the weekend, back testing, whatever, and then get ready for next week. So that being said, I don't want to waste any time here, so let's go ahead and get right into it. First off, I do want to say a big fat welcome. I know it's Saturday. There's lots of things going on, whether it's football, the Ryder Cup, beautiful weather, whatever you guys got going on. You being here shows that you are very serious in learning actionable strategies that can help you in your trading journey. So it does mean a lot. So sit back, listen closely, take notes, and we're going to go ahead and get this rocking. Before we start, we must always begin by the risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. Trading stocks, futures, options, forex, cryptocurrency, securities in general are risky. There is risk in trading. Always consult with your financial or tax advisor before applying real capital in the markets. All right, so now's the time we want to shut off all the distractions. I know you've already done that, shutting down Facebook, TikTok, Snapchat, Instagram, hush the crying baby. I'm going to try to keep this short and tight and sweet, about 50, 60 minutes or so, and listen closely, take good notes, and we'll answer all of your questions. In fact, we'll take a look at some the market environment, see how what I'm going to teach you is working in today's markets. Before we begin, I want to formally introduce myself just to show you that I am a human being. I'm not a robot. I'm a husband, father, son. I love hanging out with the fam, whether it's at the beach, on a boat, hiking, or on the golf course. I spend a lot of time working, a lot of time in front of the screens. So I like to get outside and enjoy the great outdoors when I can. So these are some pics of my family here, my wife, my two girls, and my dog down here photobombing me on the boat. Just to show you that I am human, just like you guys, and feel free to ask any questions during the presentation. All right, let's talk about my journey, how I got here, where I have the privilege of speaking to you today. In college, if you can't see that big elephant and that big A on the left, that is my alma mater. Well, in college, I majored in investment finance and economics, and that's great. But I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. We were playing golf one day. He's asked me what my plans, what I was going to do. Embarrassingly enough, I had no idea, no clue what I was going to do. Well, one thing led to another. He started telling me about his experience in Chicago, the Board of Trade, all things Chicago and trade in general. I was immediately intrigued. So what happened next? Well, I went back to school, started doing some research on Chicago, trading floors, commodities, futures, option stocks, everything. What happened next? Needless to say, I was a bit green on the sleeve when I sold my car 3 days after I graduated. I rented a U-Haul truck and I drove to my new digs in downtown Chicago. Right here, signed a lease in this studio apartment in the Marina City Towers, also called the Honeycomb Towers, overlooking the beautiful Chicago River. And I had an excellent time, great time here. Actually, the same day I moved in, I took the U-Haul truck back to this depot, hopped on an Amtrak, and I scalped some tickets to the U.S. Open to chase Tiger and Phil around. So I like to call that my first trade, if you will. But back to my journey or my career path. My first career until this, and I want you to picture this. I was working the Asian, European, and early New York session trade desk. And if you remember me telling you I sold my car, well, this picture right here could literally be me walking to work at some time around 6 p.m., 2 a.m., or if I got up early, maybe 6 a.m. And I remember on numerous occasions, me walking down the middle of LaSalle Street, me and nobody but a snowblower looking up at the great Chicago Board of Trade, the god of grains, staring down upon me, getting into the board of trade and the temperature reading a solid negative something degrees Fahrenheit. Look, I am from deep South Alabama. I know heat and humidity. And so when we got into the teens, it was like a godsend of warmth. So I did this right here for a few years, working at the board of trade, handling some serious trade size across the CBOT, CME, NIBOT, NYMEX, various London Asia exchanges, trading for our hedge fund, banks, CTAs, everything from corn to copper to hogs, Eurodollars, Japanese government bonds. It was an incredible learning experience, both with the markets and trading, as well as the Chicago big city life. But I decided to head back south when some other opportunities opened up. And that's when I went truly corporate. I went from a fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life managing equity and fixed income portfolios and other investment management roles in this glass building right here. To me, it was extremely boring, but it was the safe route. But I missed the action and the excitement of the pits, the tape, and the screens. So through some additional contacts, I was led to a day trading firm where I helped run operations, execution, trading, education, to then running a couple of futures brokerage firms, and then ultimately working in a private family office serving ultra high net worth individuals, doing a hodgepodge of all these items. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading, the trading world, me sitting in an office tied to a desk, looking out the window, and of course dealing with your typical corporate red tape was just not in my blood. I'm not a sit around the water cooler, shoot the you-know-what type of person. I wanted to get back to the markets, to the charts, to the trading. And while I was still trading during this time, I truly missed being in the weeds of the markets, following the charts, doing the analysis, and so on. So I left the corporate world and I started seasonal swing trader. And it's here where I publish research, ideas, and analysis to my followers, and it holds myself and our community accountable each and every day. But during this journey, there were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I learned that I was not a trading god. I was not above the market. The market didn't care about what my position was, and it damn sure didn't care about my opinion or what I thought it should do. So what does that mean? It meant blown accounts, emotional trading, acting like a gunslinger, poor risk management. But these are all battle scars. And in this workshop, I'm going to attempt to help you to think smart, think logical with a proven price action strategy and plan so you can avoid the many mistakes that I, and I'm sure several of you have or are making today. But let's talk about you. Why are you here? You're here to have a reliable pattern for all market conditions, to have a strategy for all asset classes, and to be agnostic of market bias. Because in today's markets, it's imperative to make certain we have a strategy that can trade both ways. And I think that we saw very clearly this past week that the market does not always go straight up. We need to employ strategies that can profit during up markets, down markets, and sideways markets, and do all of this without guessing. So today, I'm going to show you a pattern that results in trend reversals, show you the point where a trend is likely to reverse, show you a pattern with the least risk and highest reward. So who here wants to see this? Who here wants to see this and see it now? Does that sound good? Excellent. So if you're ready to learn a strategy that is not only low risk, high reward, but also works in all markets, all time frames, asset classes, market conditions, and styles, you are in the right place. Because I'm not going to sit here and teach you a strategy that only works on a 1-minute chart of soybeans or a weekly chart of Google or a 4-hour chart of the Japanese yen. I'm going to show you a simple and straightforward strategy that works in any market, any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, a scalper, day trader, swing trader, position trader. You trade the underlying, you trade call options, put options, debit spreads, credit spreads, iron condors, it doesn't matter. What I'm going to show you is powerful, and I'm actually going to prove it to you. Before we continue, it's important that we cover the process. Has anyone here heard of Jesse Livermore? If not, go pick you up a used copy on Amazon for about $5. It's called Reminiscences of a Stock Operator. It's almost like a required reading of any serious trader or investor. A question I often receive is, what do you think about the markets here, Silas? My typical response is, I don't know and I don't care. In fact, we were with some neighborhood friends last night. They're asking me about the market. It's like, look, I don't really care, nor am I going to try to predict. And I know that may sound harsh, maybe it sounds ill-informed. especially when you're asked by friends or family members, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. I'm a trader that trades strategies based off probabilities. So we want to forget about market assumptions and only focus in trading with high probability strategies and what is in front of us. And that means no more predicting. So successful traders possess three common traits. We must realize knowing what is going on in the news and knowing how to make money consistently are two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what we think the market is going to do tomorrow. And I realize it's a difficult concept for maybe new traders or even seasoned traders struggle with this. I certainly want to form my own opinion because it's just human nature, but it took me years to figure that out. You see, it doesn't pay for me to try to absorb every financial story out there or slap every indicator on a chart. All I care about is when the markets I am following reach key criteria. But there is one more trait, because if we allow probabilities and not talking heads to define our next move, we need to really possess and control one more trait, and that is patience. Because we as smart traders know that trades should never be forced, because a forced trade is not a statistically sound trade. Again, we are in this for the long game, and patience is expected if you wish to bring in profits over the long term. And I realize that may sound boring to the aggressive crowd out there, but I am more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario. I am confident in trades that consist of key criteria that are setting up, and we are talking about extremely high probability trades. Patience is the key ingredient to the success of this strategy and really any strategies that you may want to employ. So what is a high probability strategy? It's one that requires patience coupled with a disciplined approach. Waiting for the appropriate scenario to unfold with a high probability of success is what makes this strategy a success. It also recognizes that opportunities are made up easier than losses. So if you let a few pass by, you don't dwell on what could have been. There's always going to be more opportunities around the corner. Lastly, I realize that the less I trade, the better my strategy will likely perform. And the long term is what matters, and this likelihood is what makes this high probability strategy unique and successful. But the grand takeaway here is that patience pays in this game. So Silas, what indicators do I use? What's the secret sauce? What are the ingredients? Well, we've already talked about one being patience, but I learned early on to keep it simple. Pick a few indicators and try to follow them or that strategy for as long as you can. I can't tell you how many traders I know send me emails and screenshots. They have Donchian channels, market profile, GAN, Bollinger Bands, bid retracement, all on one chart, and the list goes on. You can't even read the price action. That's fine. There's nothing wrong with that. But this high probability strategy uses price action alone, plus one very common and free indicator, along with a couple of pro tips to take advantage of sentiment and technical extremes. So has anybody here seen Jerry Maguire? Love it or hate it, it's a famous line. I'm not going to jump up and down on a desk annoyingly, and I can't show you the money because I don't know how you trade, but I will show you the opportunity. So let's get to it. It is divergence. Wow, brand new concept, right? Of course not. This divergence, everybody is probably familiar, but before any of the naysayers, I don't have any naysayers, but any of you that might be thinking negatively, open your mind, because I'm going to show you how we use divergence with a little bit of a special sauce. So let's quickly talk about it and what it means. Divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns us that the current price of the trend may be weakening, and in some cases may lead to the price changing direction. So basically, it's an indicator and price action being in disagreement, using any relevant indicator such as MACD or RSI, etc. And it's an indication of a reversal or a continuation, but more often a reversal. Let's talk about the details. Can occur between the price of an asset and almost any technical or fundamental indicator or data. It's typically used by traders when the price is moving in the opposite direction of a technical indicator. Now, positive divergence occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Because it's the earliest indication of a reversal. It's a good sign to exit, a good sign to scale, and it means that we're usually buying near the bottom or selling near the top. Hint, hint, this means that the risk on your trades are very small relative to your potential reward. Types. Let's talk about classic divergences, or sometimes called regular, and we have bullish and bearish. So bullish div is when price action makes a flat bottom or lower low, but a higher low on your oscillator. Bearish div is when price action makes a flat top or higher high and a lower high on your oscillator. Traders use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a price reversal. If the market is making new highs, but the RSI starts making lower highs, this is warning us that the price of the trend may be weakening, and that's negative divergence. Positive divergence is the opposite situation. Imagine the price of a stock making new lows while the RSI makes higher lows with each swing in your stock price. Traders would then conclude that the lower lows in the price are losing its downward momentum and a trend reversal may soon follow. Let's take a look here at regular bullish. This is an example of regular bullish divergence. It's the most frequent and usually considered a sign of a reversal. So if the price is making lower lows, as we can see here, low, lower low, but our oscillator is making higher lows, low, higher low, this can be typically found near bottoms. Now, we don't need a series of lower lows. We only need one low to be lower than the previous low. Here is regular bearish divergence, also the most frequent, usually considered a sign of a trend reversal. When the price is making higher highs, we have high, higher high, and our oscillator is making lower highs, high, lower high. And this can typically be found near tops. Let's talk about identifying trend strength and consider the following scheme here. At point 1, buyers believe that the trend has recovered or a new trend has begun and they want to make money. So they start buying the market, opening up long positions, and they drive the price higher. The trend accelerates as more and more buyers are jumping into the market. At point 2, when buyers are starting to take profit, the trend starts to weaken. Buyers still dominate, but they calm down a bit because they're afraid that the trend is coming to an end. And then we get to point 3. No more buyers in the market. The sellers start stepping in, selling the market, and there's no more buyers. So the trend is likely to reverse. Now, we can use tools to help recognize trend and trend strength, and one of those can be found with the popular RSI indicator. I think the standard rule of thumb, if you will, is when the RSI rises above 70, the market is considered to be overbought. When the RSI falls below 30, the market is considered to be oversold. It's a great concept, but we're going to use the indicator in a slightly different way. Now, let's look at the same chart. There's 2 significant highs labeled A and B in the price chart, as well as in the corresponding highs in the RSI pane below. In the price chart, we see that B is higher than A, and that means the price is going higher. In the RSI pane, it's just the opposite. B is lower than A. It means the trend is weakened and is likely going to reverse. And lo and behold, what happened? The market reversed, it sold off, and it sold off hard, okay? Now, we talked about the RSI in the previous example, but it can be replaced with any momentum indicator, CCI, stochastic, MACD. All these indicators are derived from price, so there's no better or worse indicator. It's really just about preference. Doesn't matter what indicator you call your best friend, every approach is equally good, but we want to get back and focus on what matters, which is the concept of divergence. So let's quickly recap here for context before we take a deeper dive in charts. Bullish divergence is when price makes 2 significant lows, but the second is lower, and the RSI makes 2 significant lows, but the second is higher. Bearish div, price makes 2 significant highs, but the second is higher, and the RSI makes 2 significant highs, but the second is lower. Okay, let's get back to the chart. We previously defined divergence as a discrepancy between price and indicator movement. Note that we've now added the MACD to the chart. When the price makes a new low, right here, low, new low, but the MACD makes a higher low, low, higher low, we have bullish divergence signaling that the trend is likely to reverse. And this is classic or regular divergence. The black line of the price is sloping down, but the black line on the MACD is sloping up. Now, the depth of the divergence is a bit more subjective. When you look at this example, you see two div patterns, a bullish and a bearish. The first one here is nice, but the second one doesn't look as promising because the two peaks or troughs are not very significant. We consider a divergence to be deep if the MACD crosses the zero line. Such a divergence provides a much stronger signal for a trend reversal. So on this chart, we see two divergence patterns. The first example is an almost double bottom, if you will. The second example has more defined peaking action. When we peak right here, notice that the MACD crosses the zero line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the zero line, it means that we have a higher quality divergence pattern. So now that we know the basics of divergence, let's look at ways we can approach them in a smart and methodical manner. So as we've talked about, divergence patterns can lead to consolidation, correction, or trend reversals. And that's great, but we need a definitive plan about where to enter, where to place stop losses, and where to exit. Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. And when the trend reverses, it's every trader's goal to try and stay with that trend for as long as possible. And we know that divergence is a very, very reliable pattern. And sometimes this is what chart pattern traders see, maybe a double top. And then this is what Elliott wave traders see, maybe a shortened fifth wave. But they all refer to the same thing, the divergence pattern. So this is what chart pattern traders see. This is what Elliott wave traders see, but this is what we see. Most traders don't realize that, say, MACD or RSI divergence is exactly what they're looking for. Our approach removes the subjectivity because the div pattern is well defined. So now let's talk about entry. Let's look at this with even greater detail on some charts. So the first is entry. Where or how do we even enter these trades? Now, there's a couple of different ways we can consider entries. And the first one is a simple enter on next candle open concept. So we wait for the div pattern, or the divergence candle to close, and then we enter on the next bar or candle open. Another method is to wait for candlestick confirmations. That is where we wait for a bearish candlestick reversal or some type of engulfing pattern for shorts, or some type of bullish divergence or bullish engulfing pattern for long positions, okay? So we talked about entry. Now we have to talk about the least fun or exciting aspect of trading, but by far the most important. That is stop losses or risk management. So one could argue all day about the best place to play stop losses, but let's keep things simple and objective. For a stop loss with this strategy, we can place it just above the bearish divergence pattern with a little bit of a buffer for a short, or just below the bullish divergence pattern minus some ticks for a buffer, which we'll talk about later, for a long, okay? So in this example, we see that the second turning point, or the point of divergence, acts as minor resistance from which price uses to retrace, and we are thus protected from being stopped out too soon. So we've covered entry, we've covered stop losses. Let's get to the fun part of trading, and that's profit taking, or putting our targets. So remember, our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon here, so we don't want to place the first profit targets too far. I found in my trading and back testing, a wise place to place a profit target are at areas of significant support or resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks, pips, or points. The divergence valley is a good place for profit taking. Notice that we have very clear price structure up here, and its prices are likely to gravitate towards these areas like a magnet. Let's look at another example. It's no coincidence that prices have reactions at these levels. So by taking profits at these levels, We can profit from div patterns that result in minor trend changes or corrections, and we can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals, and we want to take advantage of these trends that can occur, which we'll cover in just a bit. Let's talk about candles. When a candlestick reversal pattern or an opposite div pattern appears, that can also serve as a good place to exit. These important reversal patterns can signal that the trend is likely going to reverse or at a bare minimum pause. So if the candle pattern appears close to the first take profit objective, but our order wasn't filled or the objective wasn't reached, it means that the price could possibly reverse from our level of structure early. We then simply close a third, half, 2/3 of our position, move our stops, and we don't wait until the price reaches the take profit level. So let's take a look at that in the next example. Here we can see, here's our buy entry right here. We can see we're working price targets or limits up here. Price lurched up to the valley area, put in a bearish reversal candle right near the TP level, retraced a bit, came back up a second time, reversed again. But this time it drifted all the way to the stop out area. So that's why it's a good idea to consider banking some of our profits, closing part of our position, ramp your stop up to break even, rather than getting greedy, holding out for that last bit of ticks, points, or pips, okay? Now, another great way to trade strategy is add a couple of moving averages to your charts. It doesn't matter what it is, but what I've got here is an 8 and 34. 8 and 34 EMA. The 8 is the green or fast EMA. The red is the 34 or slow EMA. The first look at this example shows that the candlestick pattern, reversal pattern right here, was possibly a solid place to exit. But look, I'm not complaining. If we are looking to get short right here, and we're working to take first profits right here, I'm not complaining. And I'm certainly not complaining if we have a reversal candle right here and I exit. But there is room for improvement. When we add that 8 and 34, we may have been stopped out from our shorts right here. But look, the trade reverses here and continues. When the price bounced from that slow EMA, we have a chance to re-enter the trend, and we can ride the trade lower into profit, all by stair-stepping above swing highs along the way until we either get stopped out or we have a potential reversal. So now we've seen some examples of how to catch quick moves and larger type moves. But as far as exits, the most popular approach I see amongst traders is they exit at a certain or arbitrary amount of ticks or points or pips. But to me, that is the wrong way to approach this, because we know every market and every time frame have different volatility components. So it makes no sense to just go for some random 100 ticks or 5 points on the ES or $10 on a stock and so on, because volatility changes over time, and it changes over time for each instrument. So the best way to determine your exits is what? Well, if you want to go back and spend time back testing your favorite market, volatility and nuances and movement, you can do that, but there's a much easier way. The exit strategies that I found work for these setups is structure, plain vanilla structure. That's valleys and dips at significant areas of support and resistance. Candlestick patterns. If the candle pattern appears close to our first take profit, but we weren't filled, simply close part of our position, move our stops, and then we can exit the second half of the position at the MA crossover. You got to figure out what works best for you. Now let's talk quickly about false divergences. We know there's going to be false setups, just like there is in any trade strategy. We can't avoid them, but we can certainly filter false divergences. So we know that when traders are trying to jump in a new trend, they typically want to see some confirmation. And we know that a trend reversal can be confirmed when we have that divergence breakout. And to many traders, that divergence is confirmed when we have minor support or resistance that is broken. So let's talk about this. With this approach, the entry can be too far away from the start of the move, and the risk can be too high when compared to the profit. Our goal is to limit risk. So where most traders are looking to enter right here, we're looking to take profit. We're entering here looking to take profit. Or right here, instead of looking to enter here, we're entering here and we're looking to take profit here. So I'm not saying that this entry technique is wrong, but to me, this is a much better way to lower our risk and achieve more consistency. Okay. Now let's look at another example. I'll want to remind you that sometimes the MACD histogram can look choppy, quickly reversing up and down, implying that the market is in chop zone, and that can generate a long series of false divergence signals. So anybody out there looking for some holy grail chop zone indicator, you don't need it. It's free. It's on every platform. It's called a MACD. We can easily see that the market is in chop zone. Trend, chop, trend, chop, trend. So if you can't recognize this from a good old price chart, chop, chop, trend, chop, then you can add the MACD, and that's what you need for a quick glance look if the market's trending or in chop zone. Now, to prevent overtrading, I found a clear way to recognize these patterns. Our golden rule says that the signal line must be crossed by the two peaks. Look at chart 1 on the left. You see how we have our peak? My mouse pointer. There it is. So we have a peak, and then we cross the 0 line, come back and peak again. But on chart 2 on the right, there's no crossing of the 0 line. We peak, we peak, we peak. We do not cross the 0 line. So this one is going to be your higher probability pattern. That one gets an A+, okay? Now back to entries. Remember, our goal is to enter as soon as possible after the divergence pattern has formed. So our strategy gives a signal just after the MACD hook or the turning point right here. Only after that MACD hook has formed, you'll recognize the second peak on the MACD histogram. That's where we recommend entering on the next candle open. It's a very simple and mechanical rule. But I further fine-tuned this into the even more reliable method, and that's by using simple trend lines. Experience has shown me that trend lines are a great confirmation tool really for any trading strategy. So when looking for a long signal, we draw a trend line on the chart by connecting the minor highs, place a buy stop order just above the trend line. When looking for a short signal, we draw a trend line on the chart by connecting the minor lows, place a sell stop just below the trend line. When the price breaks the trend line, we are in. And this entry is very similar to the same as the quick entry on the next candle open concept, but it sometimes protects us from the false MACD hook and when the MACD turns again and continues to fall. So it could be a bit more discretionary, but it's a very effective way to enter on these signals. And here's another quick example, but this time to the sell side. We place a trend line on the chart and we can enter on the next sell stop or confirmation retest of a trend line break. Let's recap everything we've learned. You've learned a high probability strategy, where to enter, where to place risk, where to take profits, and how to filter false setups. But how do you trade it? Have you ever wondered why the market turns against you when you jump on a promising looking trend? The most tempting signals are usually a trap, and I know that from experience, and you probably do too. As there are no more buyers to move the market, the sellers dominate. As there are no more sellers to move the market, the buyers dominate. And we as divergence masters know how to enter in the opposite direction just before a trend turns. And that leads me to this quote right here. Yes, following the herd may work sometime. Think of the 90s tech bubble, worked until it didn't. 2000s real estate boom, worked until it didn't. Crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Of course you do. It's every trader's goal to be buying low and selling high. Doesn't mean we're going to catch the exact high or buy the exact low. I don't really care to do that. I'd love to, but it's not possible. The point is, are we getting and selling near highs and buying near lows to capture the move? Now, let me tell you, when you trade this way, your winning batting average could be sub 50%. Yes, you don't have to be right 50% of the time. Hell, you don't even have to be right 40% of the time when your risk to reward is overwhelmingly skewed in your favor. But here are some additional pearls of wisdom. Remember, the less you trade, the likelihood of your success will be greater. You want to filter the unreliable div patterns and focus only on the strongest signals. And you can use a customizable indicator that can deal with this for us, where the process of recognizing these patterns on the charts are done for us automatically. And sit back and enjoy the various exit levels to find out what suits your trading style the best. But Silas, how do we do this? Well, you can scout for quick profits on the tick chart of the 1 minute, or you can trade on the intermediate time frames, the hourly, 4 hour, or use the larger time frames to catch some really larger swings on the daily, weekly, and even monthly. And you can trade any asset class you want: stocks, futures, currencies, options, ETFs, cryptos. But you've got to be patient. You've got to avoid over trading, because I will tell you again, patience pays. Patience pays in this game. But how? Silas, there's not enough time. There's too many markets, too many time frames. I understand. I am in the same boat as you are. We are very limited in our time of the day. But we've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, trying to determine if what they are eyeballing is actually divergence or not. We've now cracked the code and simplified the process. But how? I'm going to take a swig of water here, and I want to see who is ready to stand out from the crowd, who is ready to quit system hopping once and for all and treat trading serious, treat trading like the business that it is. All right, absolutely. A lot of you are, otherwise you probably still would not be here. Well, I'm pleased to introduce Divergence Dominator Pro, because it's time to automate this process. DD Pro is a fully complete, comprehensive trading business in a box solution. But let me quickly guide you through what this package is so you can immediately see how it will benefit your trading starting as early as next week. What all do you get? What is it? It's a great question. Well, you're going to get the turning point identifier indicator, what I call the TPI. You're going to get the DD Pro scanner, price action pro trading course, candlestick recognizer guide, divergence cheat sheet, DD Pro trade journal, and the TPI fast slow line cheat sheet. Whoa, that's a mouthful. Let me talk about each and every one of these here. So the TPI indicator is going to auto plot divergence setups on your behalf across multiple markets and multiple time frames. Do you want to see what this looks like on the chart? All right, this is the TPI, or the turning point identifier. This is a daily chart of ConocoPhillips, the daily chart. Can everybody see these charts? Very clear bearish divergent signs. We've got a, where in the heck is my mouse pointer again? I don't know, can't find it. So I think you can clearly see we have sells, and we have a buy signal, okay? Now, here is a chart of win, weekly chart. So on a higher time frame, weekly chart of win, we can see a sell, 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 3 solid sell signals. Now we can, in a glance, see major reversal turning points on any market or any time frame of our choosing. Here is a 15-minute chart of crude oil futures, where we can get our bullish divergence line right here with a bullish buy signal and a bearish divergent sell signal and our bearish divergence line. We can see entry, target, and risk plotted as well. So what about these values? This is a 1 hour chart of the pound yen. So our indicator plots two profit targets based off ATR components. Because remember, if I'm flipping from a 1 hour chart of the pound yen to a 5-minute chart of the NASDAQ to a daily chart of Caterpillar, having some arbitrary amount of profit target or risk doesn't make sense. These risk levels and these target levels, target 1 and target 2, and our risk are based off of the ATR or average true range of this market that we're in and the time frame. So it's going to automatically populate for you, but you have the ability to change this to whatever you want. If you want 2 times ATR, 3 times ATR, and you want take PP to be 4 times ATR and 10 times ATR, you have the ability to do that. And when you do that, these will adjust automatically for you. Okay, pretty slick stuff. Now, what platforms? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4, and Wealth Charts. You pull up your favorite chart, attach the TPI to the chart that we just discussed, and immediately begin to see turning points, i.e. divergence, in real time. The scanner. We don't want to have to locate these setups manually, do we? Of course not. You can now scan through hundreds of symbols across multiple asset classes in multiple time frames using TradeStation, Ninja 8, and Thinkorswim. Unfortunately, there is no scanner component on the others, MT4, the TradingView, or Wealth Charts, but you can scan across these 3 right here. So if you've been trading for some time, you know that these setups are very profitable, they're reliable, but here's the thing, manually identifying these are difficult, they're time consuming, especially if you're analyzing multiple markets and time frames. Look, if you're just focused on a 10-minute chart of the E-mini S&P, you can probably spot them all day long. But if you want to open up and you're looking at multiple markets, like I say, majority of you are, then you need some assistance. And that's where the TPI comes into play, automatically detecting the highest probability divergences for you with the click of a button, and even be alerted when these setups and patterns appear. So combined, the indicator scanner is capable of identifying divergences, again, across all asset classes, time frames, and chart types. But aside from the indicator scanner, I feel like the crown jewel of this package is my Price Action Pro trading course. This is a 10-part on-demand video module course that covers all of the following. This is an A to Z trading course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the TPI. So do you want to quit guessing? You want to feel confident about your entries, remove your emotions, think like a professional, scale your reward versus risk, and have a solid trading plan? If so, then the Price Action Pro can do all of this. It addresses each and every one of these bullets here, solves these troubles in a comprehensive, step-by-step, on-demand video module that can be viewed over and over again at your viewing convenience. You're also going to get the Candlestick Pattern Recognizer Guide. This is not your grandma's guide to candlesticks. We know that there are dozens of candle formations or patterns out there. This guide is short and sweet and only covers the most important patterns that you should focus on. This is a PDF that can be downloaded and printed off for your desk reference and study. Everything from the ins and outs, the structure, how to interpret, and much more. You're also going to get the Divergence cheat sheet. This is great for those that also like written descriptions and summaries that also accompanies the video modules. And here, this guide, you're going to learn regular dip patterns, hidden patterns, exaggerated patterns, the differences between each, and much, much more. So the Divergence Dominator Pro, again, you're going to get the TPI indicator for all 5 platforms, or actually 6 platforms: Thinkorswim, TradeStation, Ninja 8, MT4, TradingView, and Wealth Charts. You're also going to get the Candlestick Guide, PAP course, Divergence cheat sheet, and additional bonuses. So what is all this worth? What if you are now able to profit in literally any market condition? You can now anticipate major market reversals and turning points, or you could trade on your time, whether you can focus and look at the screen and scalp or day trade, or you're more interested in just swing or position trading. And you've now had all the tools. You have an indicator, a scanner, videos, training guides, and direct access to me. Direct access to me. DD Pro does all of the hard work for you. You no longer have to guess about where to enter or where to set your stop losses and take profit levels. But we need to determine if this is a fit for you or not. If you love scalping on nanosecond charts from dusk till dawn, getting stressed out and having heart palpitations, you get a thrill blowing out accounts, driving up to your bank and just continuously wiring funds to your broker. You have a gambling mindset, literally the market direction is a coin flip. This is probably not for you. And if not, no hard feelings. I wish you the best of luck in your trading endeavors. But if you are ready to think like a professional trader, you are ready to remove your gambling mindset, you're ready to get serious and treat trading like a business that it is, and you are ready to focus and have confidence. I cannot tell you what a light bulb moment you'll have and what a weight lifted off your shoulders when you're able to approach your market and have confidence before you pull that trigger. It's a true game changer. Then all of this could be for you if this fits your personality and mindset. And if this is for you, I have a very special offer for today's Toasted Traders attendees. Now, the Divergence Dominator Pro package has a $2,000 plus value for all of this indicator development. The DD Pro scanner, another $1,500 plus, and then all of the guides and bonuses have a real world value of over $4,400. But I'm very proud of this indicator, the price action course, all of the other educational material. I want to get this out to those that are serious, those that are tired of kicking tires, those that are sick of jumping from system to system, those that are most importantly ready to take action and see real results in their account. I'm not going to charge $4,427. I'm going to charge $3,000, not even charge $2,000, and not even going to charge $997. For the first 20 people today, as part of this Toasted Traders special, first 20 slots, we're proud to offer this for a single one-time fee of $397. Yes, this is a single one-time charge of $397. The offer link is seasonalswingtrader.com/pro. I just put that into the chat window for you. So it's 90% off of the $4,400 value. You're going to get the indicator suite, the scanner set, the PAP course guides and cheat sheets, one time, very low fee of $397. You own it for life. You get access to all platforms. You get access to any enhancements that we may make. And remember, look, we got to do this across all these platforms, and it ain't cheap, but you're going to get access to any enhancements that we decide to make. I like to cover this quickly though, because I get it asked so often, I might as well address it now. Silas, how do you trade these setups? Well, the easy answer is it just depends on the setup, my overall outlook, what my other positions I have on, the risk reward of that trade. But how do I actually physically trade them? Well, I like to trade credit spreads primarily on equities. I also trade credit spreads on commodities. I will occasionally trade debits. I also trade the underlying in both futures and the currency markets. But let me say that what or how I trade these really doesn't matter. Frankly, you should never be concerned about what I'm doing or Billy or Bobby or Susie or Johnny. Have a question or idea, shoot it to me and I'll answer you all day long. But in the end, we know that you are in control of your own account, how much capital you have, your knowledge, your risk tolerance, and how much time you can personally commit. We're all different creatures. I can't tell you that you should be trading on a 5-minute chart, or you should be trading on a weekly chart, or you should only be trading Litecoin and you should be trading Apple. It doesn't work that way. You've got to figure out what works best for you. But the good news is that this strategy works at all markets and all time frames. So whatever situation you're in, if you can commit to staring at a chart all day, if that's your style, then go for it. If you can only look at end-of-day charts because of your schedule, then go for it. All right. So the offer link is seasonalswingtrader.com/pro. and I'm going to come up to your questions here. We're going to take a look at symbols because I got about 5 minutes here, and we're also I do want to show you peek into the members area because I know it's very important for folks. I do not take into account volume nodes. Do I do volatility? So the answer is yes. I'm using ATR, which is a volatility component, to base my risk. I want to be orange. Oh, gotcha. took me a minute to get that, Dave. Good one. Okay, your trading is too broad and you need to be more focused. Absolutely, yeah, you need to be more focused. Follow, find a strategy that works. Doesn't matter if it's this one or not. And let me tell you, if you decide to use the indicator or not, really focus on the Price Action Pro course. I mean, it is really a gold mine. So this is the members area. When you come down here, you're going to see your indicator for all the platforms, the scanner, installation guides. But the Price Action Pro course really is just the essence of trading. What, I think a lot of us, and I'm guilty of it as well, and when I first started out is I was actually using price action, but I thought I needed more. I need some indicators. I need that shiny object. And then before you knew it, I didn't know what the heck I was looking at. So it just takes you back to the basics and trading how professionals really do trade, and that's with price action. And we might have indicators and things like that, but look, the indicator is a tool. Don't look at this as a green light, red light system. Think of it as a tool, because in the end, this is price action. This is all price action trading, but we're using this as a tool. Now, you might have seen we have a couple different versions in here. Okay, back here. So here's all of your courses. You can digest. These are easy to digest. I feel like, look, I'm not here to teach a thesis. They're all broken down into really nice short videos. You could crank these out in a day. It's not something that's gonna take you months, weeks. You could crank this out in a day if you want to sit down and get focused. But here we've got analyzing charts for day trading, swing trading, your journal. Here are some other bonuses and resources for you. But you may have noticed that we've got Thinkorswim 2.0. Wait, why do we have 2.0 and a regular? Well, what we did is when we built this out, we didn't have 2.0. This is 2.0. So let me show you, I'm gonna hide this. Let me show you what the original version looked like. This is the original version. So you have the ability to use either or. You really don't need both. You really don't need both. But you'll notice that the version 1 had the divergence area down the bottom pane, right? So here's your bearish divergence line, here's your bearish divergence signal. And so that kind of frees up some space up here. But when we add the new version, we of course now get the divergence signals actually on our price chart. So if we want to free up the real estate down here, we can just either remove it. I'll just hide it. I've got them both because I want to show you both. But 2.0 also gives us the entry and the TP1, TP2, and risk levels, okay? And as I said earlier, you can manipulate this data. So if you only want to trade, say, with the trend and focus on only long or short, or you want to see both, you have that option. Your ATR multiplier, again, you can change that to any value. If you only see one target or two targets, here are as take profit 1, take profit 2. You want this value to always be greater than your stop, because that ensures our risk to reward is going to be higher. And the rest of it is just style, aesthetics, things like that. So let me look at some charts here for you. And I can see here. Yeah, the scanner is awesome. Has comparable top, bottom. I use use a 1, 2, 3 top and bottom with this. When we have using those in conjunction, it's even that much more powerful. And more often than not, you'll see them line up together. But that takes into account the 1, 2, 3 top, 1, 2, 3 bottom is taking into swing high, swing lows, and this is fine. These are finding patterns you know, inside, you know, tighter time frames as well as longer time frames. What is the best time frame to scan for stocks? Look, there is no best time frame. It's a fair question, but I don't trade stocks intraday. I swing trade stocks, so I'm looking at daily and weekly for stocks. Now on futures, I will look at, say, let's go to the 10-minute here. I'll look at like 5-minute, 10-minute, hourly, and 4-hour. So this was the price action here on Friday. We had a little sell shaping up at the end of the day. But, you know, here is, you know, just using that simple trend line analysis is really powerful. You know, we can come back. Let's see what other trades we had. And I trade when we have the closes. Let's see if we have another. So here's another one here. Good setups. Gold. Yeah, we can take a look at gold. Gold. There we are. All right, so where's a sell signal in gold? Let's see what else we had. Buy signal there. Let's see what else we had. Here's the last buy signal in gold. Let's see here. Yes, this is lifetime, correct. Yeah, Ninja and TradeStation. Yes. Trader Rick, this is a one-time fee. You get access to all. So this is the right here. As soon as you log in, this is exactly what you're going to see. No, you don't have to tell me. You don't have to send me an email saying, "Hey, enable me for Thinkorswim or enable me for Ninja." You can load them on as many platforms as you wish. I run Thinkorswim, TradingView, and MT4 all day, every day. I've got accounts with all of these guys right here. Got accounts with each of these. I trade actively on Thinkorswim, TradingView, and MT4. I use Ninja for doing some back testing stuff. TradeStation, I have an account, but I don't trade TradeStation. Trade on TradeStation, I should say. Yes, I was showing TradingView, correct. You're welcome, David. Appreciate you. You should get your welcome email in, I mean, it should be almost automatic. Maybe give it 90 seconds. Look in your spam or junk folder. If it's not there, email us. We won't bite. I will tell you too, my tech guy is not working on the weekends, but should you have any problems, need any assistance with installation, passwords, all that kind of tech stuff that you may not be good at, email us. He'll get to you there on Monday, and I'll answer you. If you have other questions, I'll try to get to you on the weekend too. But when it comes to the tech stuff, I have a guy for it. Netflix 15-minute. We can do that. Netflix. Boom, boom, boom. Netflix 15 minutes. So I do have some members trading FANG stocks. So on an intraday basis, like the 1 hour and 15, I do incorporate multiple time frames. It just increases the odds. We talk about that here in the Price Action Pro course. CCL, which I believe is Carnival. Let's look at the daily. So here you can see our last setups. No, they don't. They do not repaint. Great question. They do not repaint. I am not a personal fan of repainting indicators, so when I get these things programmed, that's very important. COP. Let's see what we have. I'm actually in COP. So we got a short, and then a long. Do I incorporate seasonality? I do when I'm swing trading stocks in commodities, but on the intraday time frames, no, I'm not. I don't incorporate it on a 10-minute chart. Yes, there is instruction after signing up. There's all kinds of installation guides, videos, PDFs. We try to really make it, short and simple. Should have no problems, but look, I understand if you run into any roadblocks, reach out. Again, we don't bite around here. We're happy to help. Okay. Yeah, very simple. Yes, so the way you filter on a scanner is you can look at it, your certain watch list of yours, whether that's a public watch list or a a custom watch list. I've got a screen just dedicated to watch lists where I'm scanning across multiple markets and multiple time frames every day. And then if you want to put in, you know, $20 a share or greater, or only stocks that have options on them, or I want volume of at least 100,000, so on and so forth. How often do signals appear? Hey, look, great question, but the answer is I don't know. I can't tell you how often they're going to appear. If you're looking at a tick chart versus a weekly, you're going to have a lot more signals pop up on a 1 minute chart, but it depends on the market. The markets are always moving. I have no idea how often they'll appear. Weekly intel. So let's go to INTC. All right, so here's a weekly chart of Intel. So this, I like to see closes first, but when I'm getting signals on a weekly, that's where I would go down to a daily as well, kind of get that extra confirmation. But again, you certainly don't have to. Does it work on penny stocks? Yeah. I mean, I don't trade penny stocks. AMC. I don't trade penny stocks. It works on anything that you can chart. All right. Let's see the chord. No, you do not have to subscribe repeatedly. It's not a subscription. This is a one-time. Indicators and scans, can these be implemented in non-listed platforms? I'm not sure what you, I think the answer is, will the indicators and scans work in any platform that's not listed? The answer is unfortunately no. So we only had the indicator built for Thinkorswim, TradeStation, NT8, TradingView, MT4, also wealth charts that I don't have listed here. And the scanner is only available on these 3 platforms. So what a lot of folks will do, if you say you're using E-Trade or Interactive Brokers, you can open up an account with any of these here. Most of these are free, and then you can go do your execution on whatever firm or custodian you're using. All right, you're very welcome. What do the green lines and dark lines on the target signify? All right, good question. Let me find that. So these lines are target levels. All right, so the blue line, consider that your entry or trigger. Your entry or trigger. Let me see if I can draw. I like this little drawing tool. So this is the entry or kind of the I guess it's the entry line. The signal line is what I'll call it. And then this is going to be your risk. That's your risk or stop level. And then this is TP1 and this is TP2. So take profit 1, take profit 2. You'll notice that this is greater than your risk. This is greater than your risk because we want to trade greater than a 1-to-1 risk reward ratio. And I think these are default settings. I believe the default settings. So when you get it loaded, you're going to have like 1.5 and then 2 and 3. Again, if you want to change these because you feel like this is too tight or these are not large enough, you can change those. And it's based off of an ATR. So if your ATR is 1, and that means your average true range of that particular market in that particular time frame is $1, and you're going to use a 2 times ATR, then your risk is going to be placed $2 from your ATR. And that is a good dynamic way of placing risk and your targets. Okay, guys. Yeah, the offer link is SilasSwingTrade.com/pro. You're going to get the indicator for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4, and wealth charts. Let's see. Thank you, Pamela. Let me see. Let's see. Daniel. Let's see. I'm not. How do you say Beliti? Abby, Basir. Looks like we've got 13 slots have been taken. And the reason we limit that is because we want to give white glove service to our clients, and we have to limit that so we can make sure we answer your support questions, whether it's regarding the indicator, whether tech related. We want to be able to help you, hold your hand if we need to, and you have unlimited support. Okay, it doesn't expire in a week or 30 days or a year. You're going to get lifetime support as long as I'm still around. Andre, very welcome. Chantel, Chelsea, you're welcome. Peter, if you, again, you should have received your welcome email almost immediately. Check your spam or junk. Not on Tastyworks, no. Your scanner will scan the symbols in whatever watch list you have. So if it's a publicly accessible watch list, the S&P 500 or the weeklies or your fastest NASDAQ movers, whatever it is, it will scan the stocks in that list. Or if you create your own, like you only follow 20 commodity markets, or you only follow 50 stocks or 10 stocks, you choose the scanner to run on that, then that's what the scanner will run on. Yeah, the price action pro course are videos on demand, correct. You can watch them over and over again. Yes, it will work on cryptocurrencies. I don't trade cryptocurrencies actively. I do quote unquote invest in cryptocurrencies. I've got owned a bunch of various cryptos and Bitcoin, things like that, and I don't really access. I pay attention to the prices, but I don't trade them actively. You're welcome, Michael. You're welcome, TB. What does the E symbol mean? Not sure what you mean there. Wealth charts, yes. Can it be installed on your iPhone? Well, you don't really install it on your phone, but you can access, like I have the TradingView app, and it's an awesome app, awesome platform, and you can see the signals on your charts within the app. Yeah, the alerts, depending on what platform you use, you can choose to get alerts. So like I've got alerts set up and they're flying all the time, coming to me via email and SMS text. My wife gets on to me a bit because they're banging alerts down here. I forget to turn the volume down at night. All right, guys, I think we're well past the hour here. I want to be respectful of everybody's time. Jeanette, thanks again for having me so much. Have a great weekend. The weather is awesome here. Hope it is everywhere else. A lot of great lineup today. Thanks again for having me, your attentiveness, your interest, and I want to thank everybody, those that have joined. I look forward to working with you for a long time to come. Everybody take care, stay safe in the markets and in your health, and we'll see you on the flip side.